We continue now our week-long series called The Difference Makers. These are profiles of some of the most important people in business and finance over the past year and the impact that they've had. And over the last 12 months, the influence that Marissa Mayer has had on floundering Yahoo has been tremendous. John Fort has the story.
If you were writing the first act of a turnaround story, you could hardly do better than Marissa Mayer has in 2013. Yahoo shares actually closed above $40 a share earlier this month. Now, to put that in perspective, aside from 2 months around 8 years ago, the stock hasn't seen those levels since the year 2000. Why the rally? By Mayer's own admission, previous management invested in Chinese e-commerce giant Alibaba and in Yahoo Japan, which have seen their values skyrocket. But there's more to it than that. In 2013, Marissa Mayer established herself as both a hands-on product executive and the most marketing-savvy CEO in Silicon Valley, all but forcing employees and investors to believe in Yahoo again.
Vince Lombardi was a phenomenal coach. One of his sayings is, he was like, look, my priorities are, God, family, and the Green Bay Packers in that order. And so I joke that mine are God, family, and Yahoo, except I'm not that religious. So it's really family and Yahoo.
Product-wise, she managed to build and buy some interesting properties. In May, she paid just over $1 billion for Tumblr, a sought-after social media darling. Early in the year, she bought Sumly for $13 million, a company more notable for its 17-year-old founder than for its actual technology. Yahoo's results? Well, where it counts in the company's revenue, Mayer's not moving the needle yet. Search advertising is holding its own, but the core business, display ads, is stagnant at best. Mayer's preaching patience. She says she needs time to launch new products, which will draw bigger audiences, which will lead to higher sales. And investors seem to be listening. Mayer's putting a fresh face on what lots of people had begun to see as a stodgy company. Her face. There was that Vogue spread, and she began hosting earnings calls as live video, something a less telegenic CEO might avoid. In 2014, though, she'll probably have to deliver on those top-line results, and she'll have to avoid product stumbles like last year's fantasy sports outage and this month's Yahoo Mail fiasco, since Yahoo needs every loyal user it can get. For Nightly Business Report, I'm John Fort.